Hi everyone, Brian from Bearable Traders here. It is Sunday, January 16th. This is the weekend video. We'll go over how things traded last week and what we can expect in the coming week. Of course, the coming week will be a short week. Monday, tomorrow is a holiday for honoring Martin Luther King. So let's get down and take a look at some charts and see where we might be going next week. So we'll start out with a quick review of where things went last week. So most of the markets were down for the second week of this new year. We had some weaker than expected retail sales numbers. Wednesday we had a fairly hot CPI number. I guess it came in pretty much as expected. And on Friday we had some downbeat futures guidance or future guidance on some of the financials that reported. Of course, we kicked off earnings season on Friday with some of the big banks, and of course the likes of JP Morgan did express some concern about hitting the profit targets going forward in the coming years. So that weighed on the financials for sure. But as overall, the Dow was down less than 1%, same with the IWM. Qs managed to eke out a very small gain. It was probably in part due to that nice Friday rally we had in the technology sector. And sort of areas in strength and weakness. I mean, overall in the week, energy and basic materials still strong. Energy just keeps popping up there as being strong. Interestingly, even though markets were down, we did have a lot of the consumer, I would say, defensive stocks were down also. They had the utilities, real estate, consumer discretionary, which are typical safe havens, were down on the week. And the Treasury note finally is looking like it's going to be breaking out here, just flirting with this 1.8 level. Dollar broke down hard early in the week. It did bounce back a little, but still down on the week. So keeping an eye on that as well. Probably one of the reasons basic materials did well. And as always, before we get into the analysis of the charts, just the quick ad for my book on Amazon, Routines and Strategies of a Swing Trader. If you want to check it out, here it is. So let's take a look at the charts now. And as always, like to start out with the Treasuries bond yields, because they are the tail that wags the dog, as they say. So you can see here this 2-year it keeps going up. So just again keeping an eye on this in relationship to the 10-year, which is going up as well. So we're getting, as I mentioned in the preamble there, we are getting a bit of a breakout here. We're right at the 200-day moving average on the 10-year on the yield, and breaking out from this prior high here. And I expect the yields will continue to go higher as, of course, we expect the Fed to start raising rates, and lots of opinions on how fast that's going to happen, when, and how many. But anyway, time will tell. But it looks like we're in for some rolling off of the balance sheet for starters, and then some rate hikes to combat inflation. And here's the transports. You can see on the daily we had it's pretty much going to be a common theme through these charts. We had a pretty big sell-off Friday, but then we had a nice little comeback. This is pretty indicative of what the charts are going to look like. Although the transports are well down, they just seem to be in this range right now, which it feels like that's where we are with a lot of indexes. The transports, again, I would say if they're above the 20 moving average, they're still generally speaking in an uptrend. Volume is building a bit. Some of the momentum indicators are rolling over, so possibly heading a little bit lower here on the transports. The Dow, again, well off the low of the day on Friday. You can see there, but we are sort of trading in a bit of a range here. On the weekly, again, still above the 20 moving average, but we've definitely broken out of this uptrend channel that we are in, and now we just seem to be again trading in a range, which I think is going to be the theme for the coming month or two. Again, the Q is pretty volatile, up and down, of course, with rising interest rates. The technology sector has taken a bit of a hit, this 380 level, which was where I said was prior support. We lost that. We did try to recapture it, or we did barely recapture it on Friday. But again, we may just be trading in a range here as the Fed starts to tighten and taper. So here's the weekly chart, and you can see here we've lost this 20 moving average. We have lost it before there, and it has come back. Pretty big volume on Friday as well on this, on the week as we came back off the low. The SPY again low, and then really rallied to finish quite green on the day on the SPY. So again, lots of support there. There is some real challenges pushing higher, I think, in the rising interest rate environment. But on the other hand, I think you've got some pretty significant support here for we still are in a very low interest rate environment. Again, holding this 20 moving average here. So still in an uptrend, volume building a little bit. The momentum indicators kind of chopping sideways. You can see here on the RSI just chopping along here. The IWM, as I mentioned, 212, pretty important level. We did a couple times, we tried to finish below it. Monday we tried to finish, we were below it and then came back up. Same with Friday, we did go below it, but then came right back up to finish above it again. So again, IWM just hanging on to this 212 level here as support. You can see the momentum indicators are really heading lower here on this. So just hanging into that range. And on the week, again, you can see how long we've been trading in this range here with the IWM. The dollar, as I mentioned, really sold off early in the week. We did get a bit of a bounce back, but again, right off this prior high or prior level of resistance and then breakout. Now we've checked right back to this prior level of resistance and bounced off it. But there's a good chance that we have broken out of this trading range here. We may come back up and test this, but I would look for a move lower because we are very oversold here. So maybe another bit more move up before we possibly sell off again. The VIX, again, we're just sort of chopping in a range. This is kind of one of the indicators I look at. There's really not a lot of fear in the market, and of course, going into a long weekend, nobody wanted to hold premium, or not a lot of people did. So we did get a sell-off on the VIX, despite when the market came back, of course, as well. So nice. We are again trading into a range. There's no high level of fear in the market. So I don't think we have a big sell-off in store. On the other hand, I do not think we have a big rally in store either. Bitcoin did drop below this, just temporarily dropped below the 42,000 or the 40,000 level, I should say, and came right back up. So we did get some support there, and again, still trying to hold on to this sort of 42,000 level that seems to be important support. So let's look at some stocks I've got on watch. As I mentioned, we are in earnings season, so I am being cognizant of that. I don't really like to hold stocks through earnings reports because it's hard to know which direction they're going to go. I would have bet JPM would have been up because it was a financial and interest rates are rising, but of course it lost a lot on Friday. So that's why I just it seems like a bit of a crapshoot. No matter how you can rationalize which direction a stock should be trading after earnings. So it was really the guidance, the forward-looking guidance that killed JPM because the other numbers were good. So anyway, I'm just looking at some of these stocks. Again, I kind of feel like we're in a range here. You can see Apple's been really just chopping in a range. And again, this is a good opportunity to use options. If you're an options trader, you can sell calls and sell puts. You can protect them with upside calls and upside puts if you want to do that. But it just seems like we are stuck in a range. So a little bit of a risky strategy to do naked puts or naked calls. So just be careful of that. AMD, again, we seem to be having a support here right around this sort of 131 level. Tested it here, bounced. We did drop below it, but then finished above it on the day, and then came back down here, tested it again, and then bounced back up. So again, AMD, it looks like it may want to go back up, maybe test some of these moving averages. BRZU, I'm looking at this. This is an ETF. This is a Brazil ETF. Liking the way it's bottoming out here. It's got two things going for it. A weak US dollar, both oil. This trades this country trades very much based on oil prices, and we've really had a big sell-off here. So there is some room to the upside, quite a bit of room to the upside, maybe around $80. And again, this is a play on rising oil prices, which I think it's kind of lagged behind. It's just starting to catch a bid now, and the falling U.S. dollar helps the emerging markets as well. So BRZU looking interesting. DUAC I'm looking at. I mean, you've got an event coming up. They're supposed to be launching their site towards the end of February. The only concern I have about this is there seems to be some issues that the SEC have with some of the stuff that they've been doing, and I don't have any details on that. I have to look at it further, but this could present a nice opportunity. The only that SEC thing is the only thing that's making me hesitate on this, but it could move up to 100. But there's if the SEC come out with something, it'll definitely get whacked. So Facebook, again, I keep bringing this up. Again, this is sort of trading. It looks like it's just basically trading in a range. Again, another possible options play, or just mark those ranges and then buy and sell based on the bottom and the top. KWeb, again, we had a nice run up off this double bottom here. Now I think we're just gonna trade in a range. Lucid tried to break out. Now we've pulled back. Can't really, and the volume was pretty light here. It's been really dropping off. So again, seems to be kind of range bound. SMH, again, this is the semiconductor space. It just, again, looks very range bound here. TAN, again, I'm just keeping an eye on this one. It looks like it's still really trying to hold on to this sort of 70 level. And, if we do get some kind of package that with investments in solar out of the U.S. government, this one will definitely catch a bid. Tesla, again, range bound, sort of theme of the day. UNG, actually, after this big pop up on the cold weather, just a big pullback. We may continue to go higher, especially on a weak U.S. dollar, but again, volume really dropping off here, so you have to be careful with UNG. USO, again, we're just the story of the week, I would say, is the energy, and it just continues to go higher. So anything related to energy, whether you want to pick an Apache or an Oxy, or anything related to oil, even big ones like XOM, ExxonMobil, Chevron, their charts all look like this. So energy has definitely been the place to be, and that's got some investment in there now. XLF, I think it'll catch a bid. We got a lot of banks reporting next week, and banks do well in a higher interest rate environment, and that's our interest rates do seem to be going higher. So I don't see any reason not to continue to hold banks, whether it's the KRE, which is a small bank ETF. We'll look at that maybe in a second here. Yeah, let's look at that quickly. KRE, regional banks. This is an ETF. You can see here they've been doing really well. This has been breaking out here, broke out through 75, and now we're continuing to go higher. And I suspect this will continue to move higher as interest rates continue to go up, which they probably will. So anyway, that's a wrap on the stocks I am watching. So let's wrap things up here. January 18th. Let's look ahead. Markets again closed Monday for Martin Luther King Day, so we'll be trading a shortened week. We did lose support on the Qs. 380 I was looking at as support. Now it's more in the neighborhood of 375. SPY still support at 460. We did lose support on the Dow at this 36,400 level. Now we're looking at 35,800. And still the IWM just barely hanging on to this 212, which seems to be support level that we've seen for many, many, many months. And as far as economic events coming up this week, we've got some typical numbers that come out during the week. Housing starts, permits on Wednesday, jobless claims Thursday. Nothing too eventful. And earnings, as I said, we've kicked off into earnings season. So of course we've got Goldman Sachs reporting on Tuesday, plus many more financials, too many to mention. We've got UNH, and again, a financial Bank of America, UAL, Alcoa on Wednesday, and then another airline, AAL, and Netflix, more banks on Thursday. So lots of potential for some volatile and good moves as these companies we get into the thick of earnings season. All these companies are reporting. So that's it, everybody. Hope you had a great long weekend, and we'll look forward to seeing you 8 o'clock in the morning on Tuesday, live on YouTube. And we'll be doing the pre-market show and the pre-market show, and then of course, if you're a member, we'll see you in the room at 9:30 for the open. Take care, everyone. Have a great rest of the weekend. Bye for now.